Tailwinds from lower global oil prices. What it means for India's economy. If you were asked which global trend most affects India today, you might think of the wars in Gaza or Ukraine, or even Donald Trump's tariff war. But there's another battle shaping the world economy, the one over global oil prices. Right now, the world's oil market is caught between two forces: OPEC plus the group of major oil-producing countries and non-OPEC producers like the US, Canada and Brazil. This struggle is creating a price war with far-reaching effects. Crude oil is still the world's most traded and valuable commodity. Over 100 million barrels are produced daily, and nearly half is traded globally. Yet, due to technology and changing energy trends, the market dynamics are shifting. On the supply side, technological advances like shale and deep-sea drilling have increased production dramatically. On the demand side, consumption in developed nations is slowing due to electric vehicles, climate policies, and weak economic growth. Even China, once the biggest importer, now sees flat demand as EVs dominate half its car market. As a result, global oil supply has risen by 5.6 million barrels per day in the past year, outpacing demand growth. Prices have dropped sharply. Brent crude now hovers around $61 per barrel, down nearly 16% this year. This fall might have been steeper if not for countries refilling their oil reserves and producers storing unsold crude on ships. Interestingly, even geopolitical tensions from Ukrainian drone strikes on Russian refineries to US, China trade issues haven't reversed the downward trend. That shows how strong the oversupply is. While OPEC predicts a supply shortage in 2026, the International Energy Agency, IEA, disagrees, projecting a surplus of 4 million barrels per day, which could push oil prices even lower, possibly into the low 50s per barrel next year. For India, this is mostly good news. As the world's third-largest oil importer, India spent around $137 billion on crude in 2024 to 2025. Every $1 fall in oil prices saves the country $1.6 billion on its current account deficit. Lower prices also mean less inflation, smaller fuel subsidies and better fiscal health, freeing up funds for infrastructure and growth. Cheaper oil also reduces India's dependence on discounted Russian crude, easing trade tensions with the US. However, there's a flip side. If oil prices fall too much, Gulf economies may slow down, affecting Indian remittances, exports, and investments from West Asia. The key takeaway: lower oil prices are a temporary windfall, not a permanent solution. India must continue investing in renewable energy, efficiency, and diversification to stay resilient when prices rise again. For UPSC aspirants, this article connects with GS Paper 3 themes: global energy markets, fiscal policy, balance of payments, and India's economic diplomacy.